Hello. Today we're going to talk about a couple of topics that I will give you a very brief overview about. And we're going to start with a general introduction to cryptocurrencies, then go on to markets for cryptocurrencies, to exchanges, and then we will specifically talk about Blocktrade. My name is Bernhard Blaha and I am the CEO of Blocktrade. I have always been at the intersection between technology and economics. And besides my position as the CEO of Blocktrade, I'm also a board member of the Digital Asset Association Austria, where we have been working on the regulations for cryptocurrencies and blockchain in general for a couple of years now. So let's start with a quick story. And the story that I would like to tell you about is just a couple of weeks old at this point. And what we did was a so-called offering with Blocktrade, which means that we issued actual shares, equity, towards investors that were willing to invest into Blocktrade. And what happened was, as we can see, there were a lot of people willing to invest into Blocktrade. And for such a transaction to take place, we do require three parties. First, the investor. Second, the exchange, Blocktrade itself. And then we need a middleman, which in this case was the bank. And what happened was, in this specific case, that a lot of banks did not allow the investors to invest into Blocktrade, into the securities offering that we had started, with their own money. So the banks took the decision of the investors and decided that they are not allowed to invest into that specific company. And the reason for them doing this is they looked up the name Blocktrade and they found out that Blocktrade is dealing with cryptocurrencies and blockchain technologies and generally digital assets. And they see that as a threat. They see that as something that could threaten their business model, their market, so they do not like it. And so they took it upon themselves to decide that investors are not allowed to invest in that specific offering. And what we can learn from that is that the monetary system does not always work in your favor. Because while this is one example, I can tell you about countless other examples that are very similar to this. And in this specific case and many others, banks take it upon themselves to control your money flow. And at this point in time, they already decide what you are allowed to do with your own money, the money that you worked hard for, the money that you earned in your job, in your business, or wherever else. They decide what you're allowed to do with that. And the problem there is, of course, we could go back to cash, like physical cash, coins, and use them to pay. However, we are living in a globalized society. And in a globalized society like ours, it is simply not an option not to use digital money. So, what do we even need the middleman for specifically? And in this case, what do we even need the banks for? First, their task is to confirm the storage of value between parties. So when I'm sending you some funds via my bank, they confirm to you that I have done that transaction. They confirm to you that I owned the money that I gave to you. That is what they're there for, and you're trusting them to give you the correct information. Second, they're handling transfers for you. So when I'm saying I would like to transfer some money to you, I go to my bank and ask them politely to transfer the money from my account to yours. And they do that, mostly, as we've seen in the example before, not all the time. And third, they're generally a trusted party, because when you have a balance on your bank account, you give your bank the money and you trust them to store it for you. And you trust them not to lose it, and so on and so forth. So that is the three main points specifically with banks that we need middlemen for in our monetary system. But what if instead of a bank as a middleman, we can use the whole system, and we're seeing the graphic that we've seen before here, just without the middleman, just use it without the bank, just make the transfer from me to you, from the investors to Blocktrade directly, instead of going via a bank. And now we've understood the basic concept of blockchains and cryptocurrencies. Because what I just described to you is what cryptocurrencies are. There are no middlemen involved in the transactions. Instead, the valuation and the confirmation of transactions happens by thousands of miners. And what that leads to is that you can do so-called P2P or peer-to-peer transfers, which means that instead of going via a middleman, you go from person A to person B, from me to you, from the investor to Blocktrade directly without having any other party in between that can decide what you are allowed to do with your funds. And what that leads to in turn is that you own your money. Nobody can control it besides you yourself. Even if the bank tells you, we are not happy with you doing that transaction, you can still do it because that is what blockchain allows you to do. Full ownership, full control over your own funds. So now we have a couple of basics about the monetary side of blockchain. And what blockchain generally does from a more technical side is it transparently and pseudonymously operates registers. What do these two things mean? So I think transparently is pretty clear. Everybody can see what is happening, for what reason it is happening, and can follow it back into, I don't know, the start of the blockchain, back into all of history. The second one is not as simple to understand, so I'll go into that a bit deeper. Pseudonymously means that while you can see everything transparently that is happening on the blockchain, and you can even see the balance of any wallet, of any account on a blockchain, you do not know who operates it. So if you go on a blockchain and look up an account, it might well be my account. You might well see all the transactions I have been doing from this account and all the money I'm storing from this account. What you do not know, however, is that it is my account, unless I tell you specifically that this address belongs to me. And that is pseudonymously. So while it is transparent, while it does work in a way that gives you all the insight that you may ever need, it does not tell you who the person that you're looking at is right now. And that is what pseudonymously means. Also, what it does by being so transparent is it creates clear ownership structures. And when I'm saying ownership structures, I'm talking about pretty much any asset. That could be real estate, that could be money, but that could also be art or companies and many more things that we can clearly see who it belongs to. And by that, it makes it much less probable to have corruption ongoing or conflicts of interest ongoing, because at some point you will always be able to see who has been influencing a decision and who has ownership or interest or some kind of conflict of interest in any kind of asset. And the last thing, or not the last thing, but the last important thing that we're going to talk about today that blockchain can do is it can allow for so-called smart contracts. And smart contracts are generally quite a simple thing, because what they do is they have some conditions, and if those conditions are fulfilled, they can do some actions with you. For example, they could start a transaction, or they could move funds in another way, or they could influence your assets in some way. And so what you do is you can put those conditions into a smart contract, wait for these conditions to be fulfilled, and you can have 100% trust in the fact that this smart contract will fulfill whatever you told it to do. And from that reference is the term code is law, because the moment it is in that smart contract, it will be fulfilled once the conditions are fulfilled. And that means you can have two parties that do not trust each other, that can still rely on that technology to fulfill whatever they want to do. And that is something that we do not have so far, because you always so far need to trust a middleman to fulfill whatever you want them to do. So when we're talking about cryptocurrencies, and we have covered some basics, there's much more to it, of course, but not in the time we have today. But we've talked about cryptocurrencies now, and I'm pretty sure that at least most of you have heard of Bitcoin, because Bitcoin is pretty mainstream by now, if we're honest. It's been all over the media, even mainstream media, for quite some time now. Latest since 2017, it has been out there. However, Bitcoin is not the only cryptocurrency that is out there. As we're speaking, right now, there are about 12,000 cryptocurrencies out there. And each of them is a bit different in functionality and in what it can do for you. For example, there's Ethereum, which is the second biggest currency, which is very much focused on the ecosystem on the technical side. So they are very good for building smart contracts. Then there's privacy coins that really focus on privacy. Then there's payment currencies that really focus on the payment side of the whole technology and of the currencies. And so there's 12,000 very different currencies out there that you can have a look at. Most of these cryptocurrencies can be purchased via exchanges. But before we talk a bit more about exchanges, what they are and what they can do for you, let's talk about where the market is right now. And if you've been following the media for a bit, you may have noticed that we've had quite a substantial increase in the value and in the market capitalization of cryptocurrencies since the start of 2021. Also, when media says that cryptocurrencies are a high-risk investment, I have to agree, because they are definitely not the only asset that you should have in a well-balanced portfolio. However, with some things in mind, you can use them as a very valuable addition to your portfolio. And some people see them as a hedge against something. Additionally, cryptocurrencies do have a relatively low market correlation. That means if the stock market, for example, goes down, it might be that cryptocurrencies do go down as well in price, and that happens from time to time. But generally speaking, it has a relatively low market correlation, means it's very independent of what is happening on other markets. Not fully independent, note that, but it is relatively independent. And now we're making the switch back to the topic of exchanges. When we talk about exchanges, what you have to imagine is that they are essentially a platform that allows you to trade your assets with somebody else on that platform. So for example, if user A in this case has Bitcoin and user B has euros, and user A would like to sell his Bitcoin for euros and user B would like to buy Bitcoin for the euros that he owns, then they can do that via the exchange. And both of them go to the exchange, put in their so-called orders. Like person A is putting in, I would like to sell my Bitcoin for euros, and that's the price I would like to get. And person B checks the so-called order book and says, hey, I like that order, and I would like to take that. I would like to purchase that Bitcoin from the other person, and I will give them euro for that. And the exchange is essentially the platform that is handling all of that for you to make it as easy as possible to do such trades. And that is essentially what exchanges are. It's no more complicated than that. There are some details, of course, that we could talk about, but generally, if you got that concept, then you know what exchanges are doing. And those exchanges, as we've seen in the Bitcoin Euro example, are allowing users to trade between different currencies. So there's not just a so-called pair for Bitcoin and Euro. There's also a pair for Bitcoin and Ethereum, for example, or Ethereum and Euro, or between some other cryptocurrencies, or some other currencies like USD and a cryptocurrency, and so on and so forth. So there can be hundreds or thousands of pairs on a single exchange. And the way you have to read one of those pairs, we're sticking for now with the example of Bitcoin Euro, which is BTC Euro, EUR in short. And the way you have to read this is, if you're reading BTC, you know what currency you're trading, and if you're reading Euro, you know what currency you're basing that trade on. So in this specific case, you would want to purchase BTC, and all the prices that you are going to see are denominated in Euro. So if that, for example, says 36,000, then you know that this asset currently is being traded for a price of 36,000 euros. And with allowing that system to users and allowing those services or providing those services to the users, exchanges are kind of the entry gate to cryptocurrencies. And now we're talking a bit about Blocktrade specifically. And Blocktrade has essentially three strategic pillars that we are working on. The first one is digital assets. And what we would like to do with that is we would like to allow you to get into markets that have had very high hurdles before. For example, looking at the currently growing up generations, it is very hard for them to get into the real estate business. However, if in the future we are going to be able to trade real estate in fractional shares on our platform, it makes it much easier, because suddenly you do not have to come up with, 300,000 euros. It might be enough if you have 30 euros to get into the real estate investment market. So we're allowing people to get into those markets much easier than they did before. And that's not just real estate, there's many other markets as well, like the art market, for example, or the market for shares of small and medium enterprises, and so on and so forth. The second strategic pillar that we are working on are educational services. And I have been in this industry for 7 years now. And what I have seen and learned in those 7 years is that people still do not fully understand, and do not understand to the extent that they actually would need to understand, how the markets work, how the underlying assets work, how they can calculate their risk appetite, and so on and so forth. And Blocktrade is aiming to provide the knowledge that you need to participate in those markets right where you need to acquire that knowledge. And the third part that we are working on is the ecosystem. Because Blocktrade is supposed to be not just an exchange like there are others, it's supposed to be a whole ecosystem. It's supposed to cover all your needs in relation to the services that we provide and around them from the moment you wake up to the moment you go back to bed. And that ecosystem that we are building is the actual big value that Blocktrade with its partner companies is going to provide. If you're talking about Blocktrade in general, I would like to give you some details about what we are, how we are set up, and how we work. Blocktrade is based in Luxembourg, in the heart of the European Union. We're working very closely with regulators and intentionally exposing ourselves to them, because we believe that regulation for new digital assets is a good thing. Because what regulation is meant to do is protect you, the consumer, the customer of us. And so we are really embracing that. And that also comes with loads of experience when it comes to regulatory topics in the whole team. Every single employee has been confronted and has been exposed with and to regulatory topics. When it comes to listing assets, we're following a quality over quantity approach. That means while there are 12,000 digital assets, cryptocurrencies out there, we do not have all of them listed intentionally. Actually, we have just a fraction of those listed. And the reason for that is that before we list anything, we're doing very thorough due diligence. We look at them from a legal perspective, we look at them from an economical perspective, and we look at them from any other perspective that makes sense for you to look at. And so we are taking a lot of risk out of trading in general because we cannot always guarantee it, but we try to only list the safest assets out there. Now let's talk about the next steps that we are going to do with Blocktrade. And before we start that, you should know two things. First, since I've started building businesses in 2012, 9 years ago, my approach has been to talk about things and promise things once they're imminent, once they're really about to come, and not at the moment where they're maybe weeks or months away. Because I feel that if I promise on something, I have to deliver. And that's the strategy that I'm following, that the team is following, and thus that the whole company at Blocktrade is following. The second thing that you should know is that we have just recently finished our funding round, which gave us a capital increase of 25 million USD, which is very substantial and happens to be the biggest crowdfunding campaign ever to happen in Luxembourg. And with those two things in mind, let's look at some of the next steps that we're going to do. Now that we have done the funding round and that we have released some very interesting features like the fiat gateway that we just recently released, we are ready to start our marketing push. So you will see the brand Blocktrade on platforms that you may not even have expected to see it, but we are going to test a lot of marketing and bring in a lot of new users to Blocktrade. Additionally, we are in what I call a feature release wave, meaning that after we release the fiat gateway, we are going to have new releases on a monthly basis for the next months to come. For example, I can already promise you that there's going to be something very interesting coming in October and in November and in December and in January. So wait for that release schedule, it will be amazing. And while I have said that we are following a quality over quantity approach when it comes to listing new assets on Blocktrade, we are definitely going to list a lot of new assets in the near future. And that is something where I would appreciate your help. Do you have any assets that you would like to see listed on Blocktrade? Please tell our customer service about it. And lastly, we are going to do our first baby steps for the ecosystem that we are going to build. That will be such a big thing for Blocktrade and its surrounding companies. And then there's a thing that will combine the last of those two. And I'll drop a keyword here that I know a lot of you are waiting for, and that is ECredits. If that's the first time for you hearing about ECredits, check out the white paper at github.com/ECredits.
ECredits is much more than just a new listing. It is going to be part of the very same ecosystem as Blocktrade. And within this innovative ecosystem, ECredits acts as the lifeblood connecting it all. As a payment token with its own wallet, which is called the eWallet app, ECredits will be the long-awaited digital and future-proof alternative to traditional systems, creating new shopping experience for both merchants and consumers. And this was just a very brief glimpse into ECredits, and there will be many more exciting features to explore. However, at this point, I don't want to give away too much. Yet, trust me when I say that the coming months are going to be very exciting. So here's a little recommendation. If you have not already done so, sign up for the Blocktrade newsletter so you do not miss ECredits or any other of our upcoming listings. Thank you for your attention, and I hope to see you soon on blocktrade.com.
That was my brief overview about cryptocurrencies, exchanges, the market, and even a small sneak peek into ECredits. Thank you for your attention.